What's up, everybody? Peter here, Forte Trader. It's Friday, September 25th. Just gonna do like an end of the week recap and start doing in the beginning of the week too some of these video spread trading sessions here on future spreads, future and commodity spreads. I'm gonna start doing some breakdown on some of these stuff that I have in my watch list, and you guys out there in the public can follow along. Try to see if you can follow some of our shorter term swing trades in this series here. I'm going to do 15-minute charts so we could attempt to find trends and also levels to put into intraday strategies. This last week we took 3 trades, Wednesday, Thursday, Friday, and finished just with one product, a wheat corn spread on one contract at a time, a total of $700, about 15 minutes a day. So today's session was probably the weakest gain and only made one whole point, but it was a good exit, and I think it takes judgment to do it. And in that judgment, it's experience is what I mean by judgment. Had I not been familiar with this market, and I'll show it to you guys in a bit here, it's easy to make bad decisions. So very important to learn the market. Now, I'm dealing with a lot of spreads and I miss opportunities. Reason why I'm in the teaching industry as well, and I'm introducing a lot of spreads to different clients. I have private clients that trade only energy products. I have people that are strictly ag, um, and people that are learning just learning. So I have to teach some generals stuff and show some markets that are more popular in the spread community. So let's start right now with the standard intercalendar spread. I'm looking at a cattle calendar spread, and I'm using my dynamic support resistance line off trading view. I'm going to uncheck off my stochastics momentum indicator. There's a lot of things I learned from my mentor. I wanted to introduce him to you guys today. Couldn't happen, unfortunately. But even I have to sometimes step back and go learn, right? Everything is about collaboration, learning from others. And I got to step back and go to my mentor and get rechecked on things that I may have forgotten and started forgetting, because different strategies I work on in the spread world, and using things like exotic bars and such like that. Just you tend to sometimes veer off the plan because you're onto something good, but um, lo and behold, the old school rules always seems to work. At least what you learn that works for you. And so, looking at 15-minute levels on this cattle spread, the months aren't going to be that important, really. We're going to look at the area here where cattle sold off since like August 26th of last month. There was a lot of people that were shorting this thing, and it made about a good run down to this support level here of the like just under minus fives, and it did about 2 point run on your smallest calendar. So some guys made a lot of money on this trading wider spread calendars. Uh, we'll save that for another kind of a video, but most of you by now that follow me know the wider we spread out our calendar spread, we could add more volatility, more risk reward to the move. So if the closer we keep our calendar months, like for example, December cattle versus February cattle, things like that, it's smaller. If we spread them out by 6 months, etc., and then you can gain more on the move. Everything else is pretty much the same, and obviously there's the volume issues too. So that's why sometimes you don't have a choice. So in this case, because the fact that we pretty much started up a good trend, we want to stay with the trend. So we have at our camp the Forte Trader bread and butter strategy, which utilizes Hikinashi bars. And the reason we do that also is because a lot of our traders come in from the technical retail world, and we do have institute people too, but we don't use standard spread line chart. It's just a little bit more exciting to use the Hikinashi candles. We also do not use standard Japanese candlesticks because a lot of these markets can get light and they can gap down along the way. So it's not to your disadvantage if you did that and you were in the right direction of the trade. It just means that that it's just going to look like that. But if you're using the Hikinashi, it's going to help keep you on the right side of the trend. So you shouldn't usually have that issue and then having to be concerned about um, the patterns looking like they gap a lot. Yeah, cattle and hog can do that, but if you're in the right side, it's going to be to your advantage. We just are using these bars to make sure we're on the right side of where the big money is. Big money has an intention. You can't change the path. They can. So you can't do it. I can't do it. So they made this run down here down to about -4, 4.5s. We saw that once this trend ends, how do we identify that a trend ends? We use our trend finder, and the cool thing about that is when price starts getting in and out of these things, we can identify that we are in levels now, and we can start trading that because that happens a lot in the future market, right? And so using our dynamic support, we've had a good week here of up and down about just over half a point or so, if I'm not mistaken. Yeah, just over half a point, and $400 a point on cattle, with pretty decent sized margin. You can have played this channel. Now, once again, price starts its trend, right? You want to stick with trend. So again, how we identify that we're sideways? Look to see contraction in moving averages. That's what I like to use them for. How do we like to see some momentum? Some momentum. Now, it's not exactly a momentum indicator. Some momentum in a long run or a long reversal. Now, we don't know if this would stop or keep going. One thing could be the expansion of the moving averages, right? So this ended up becoming a breakout after it got tested, once, twice, almost about 3 times within a matter of the last week. So in this process here, you could have traded this and maybe perhaps use some kind of indicator here to gauge loss of momentum at the tops here. You have a lot of divergences here that occurred. Thanks to my mentor Daryl, a big shout out to him. I wanted to show you guys his trading education because he's always been my technical mentor. I self-taught myself spreads, but no matter what it is that I go to my mentor with, if it has technical charts included, in which they always do with me because I hate trading fundamental, I despise it. Then basically, he has a way to fix me and correct me. And then, so you have divergences here at these tops. You could have called, known that potentially these moves weren't going to continue and we're going to turn. You had a divergence up here that wasn't the prettiest one, but eventually it does form, and then you had a divergence to the long side this way. Now, you're not going to win every trade, but these are chances here, right? So here's a way we can look at that. You can break it down and you can make a little bit more precise entry um, by maybe looking at like a super trend. We also have some other exotic bars we can use on TradingView. Believe it or not, you might think I'm crazy because some of my buddies do, but you could use Renko bars or some kind of other exotic bar to just make a precision entry once you know that there's potential there for that. Also, using a combination of super trend. So this play made once we saw the divergence on the standard 15-minute chart using the Hikinashi and pretty good technical analysis that we hit the bottom 3 times going up. Could have essentially come in here on this long wick candle with Renko again on TradingView. They have ATR based Renko bars, so it kind of helps keep good control of where your support resistance lines are, and it gives you a good edge. And then you can go and take this on up. And so far, this thing is almost point and a half, about $550, $600 since the 22nd. So that's going to be earlier this week, 3 days. One trade. So you're probably, if you were in this, you could be still holding this, right? Or you could be cashing out. Um, if you do look at the 15-minute again on this calendar, I'm going to try to speed these up and go through as many as I can. You can see that towards the end of the day, this thing was dying off, right? So we have higher highs here and momentum to the short side. So that's a way you guys can trade. I know I have my bread and butter strategy. This is a way to improvise your guys' trade ideas and keep it a little bit more professional. On our hog calendar spread, we see on our 15-minute, we can see where the big money test these areas, test these resistance levels, breaks down and continues and tests these support levels and visits them. And again, if this doesn't work out for you, if you were anticipating a stop there for any reason, you just get out of the trade, get back in when the time's right. We don't have any divergence here, but we've had a lot of revisiting, a lot of volume holding up, and a good long break back up to the 4.5s. And this again is a good move. Could have occurred just off your 15-minute chart for a good, over a point, more or less some slippage here and there if you had any. And not a bad play, for another $400 in a 2-day play. So you could do it that way. Now, there is another kind of a spread. It's a little bit more expensive. You're trading actual cattle plus hog. These are inter-commodity products, and you know what? They pay better. They cost more to get in. They cost a little bit more margin. So if you don't want to do a straight up cattle calendar, it's a little bit cheaper way for you that you can get in, more affordable way for you to get in, a more affordable way to also do a hog spread. But if you have a bias on both, hell, you know what? You can take it just on one calendar, and same deal here. You can see and trade these areas on a 15-minute chart and do shorter time frame trading of these commodity spreads without having to play the bigger time frame. Now, again, I'm not going to go into bigger time frames here. We can, but just even like if you go into 1 hour, you can catch bigger swings of things. You can do this at 1 hour. You can do the higher time frame. Most people trade these on higher swings, but also don't forget a little concept. Okay, don't forget that in the process, let's go up to maybe 4 hour of 4 hour swings of swing trades. You can actually make money all up and down in between. Trading intraday could be not necessarily intraday, but shorter swings may cost you a little bit more trades and a little bit more attention. But if you have nothing else to do and you want to work harder at catching a lot of the swings on the way up and on the way down, you can capitalize on that and actually even maybe in the long run, potentially when you get good at this price action, make more money. Okay, so we see here if we went on a 15-minute on this cattle hog, we had a little bit of a sledding divergence here. And again, another good confirmation of things that we've held up here before. We broke out. Now it kind of created a resistance once, twice, three time. When momentum getting a little bit weaker, however you want to look at it, use another candlestick theory. But we see our dynamic, resistance level here of 49, and we made a run down here from this morning. I mean, I wish I caught this, not being distracted. And this was a whole 2 point move. This is an $800 short play on cattle versus hog for the December contracts. Okay. So now some of these spreads aren't very clean. One of my big favorite ones has been the wheat corn spread. This is what I capitalized on this week. This is actually a Kansas City wheat versus Chicago wheat. I had some trouble doing a bad call on this one. It was last week or so on a commentary. I called a potential reversal in a short, but it kind of just went sideways. Again, you could have been playing these levels, and they're 2 point levels. Grains trade at about $50 a point, so you could have been trading these up and down. It's going to get a little messy sometime. It's not going to be pretty. But you could have been trading these up and down. And the cool thing with these spreads, ladies and gentlemen, they're thick on volume. So you got to figure it out. It's almost becomes like you're doing these little mean reversions, something like we would do in some of the energy products like crude oil, which I'm trying to work on making an extra segment for our students in my little course and our traders in our group. I like to call traders, not students, and because we're all students in life. But yeah, just to create a mean reversion segment because it's something I'm trying to work on. I've been putting some stuff on. I'm not really a big time. Naturally, I've been a mean reversion trader. It's a contrarian mentality, but in the calendar spread world and spread worlds, we get a lot of markets that trend a lot. I could look at it that way, but to look at it in a sense of a constant mean reversion, you can get ran over with that stuff. Like the Bollinger methods and things like that. When they break, and your anticipation is constantly, stacking in, stacking in, stacking in, come back to bring it back, and you get ripped. And it only takes one rip when you're a contrarian trader like that to get hurt. So really, I try to do my best to first do our bread and butter strategy, try to stick with our trend, keep that pattern forward. Now, here's the trade that I got paid on this week. We had a $350 play down this way, bread and butter strategy off the 15-minute. Now, we do trade off of another platform called Futures Plus. It's all grayed out and out right now because of the fact that it's Friday and markets are closed. Here's my spread that I trade wheat versus corn. It's a synthetic setup in here. More details on that later. But, I still charge because it's more cleaner, web-based, transparent off of this trading view. We do as good as we can. Nothing's perfect. Okay, so in this short here, we basically used our bread and butter strategy on the 15-minute. We had some nice open short candles in Hikanashi, and we hit it to the bottom of this area. Now we had got out here on this pullback, never took it into the rest of the day. So this was a $350 winner. Rode it through the next morning. Sat here yesterday morning in 15 minutes, and I posted this in the group, posted the results, the timestamps, the order, and everything, and took this up here pretty much almost to the top. Did a $300 move. I had about 15 minutes in this trade, and sorry about that. I had about 15 minutes in this trade, and it was out, and then it had to take off. Um, Personal stuff. Daughter totaled her car. She's in the military, and we all kind of probably went into a panic mode. So um, this pullback happened after the fact. I didn't pay attention. It was another good little run up here. I don't know if I would have taken it anyway. So it did make another run that was equivalent to it tested up here in these 188, 189s for another 4 points. Could have been another $200. And if you were super proactive into the close, well, that was the close. It did it right into the close, and then in the open there was a sell-off. Now last night, um, I just could not sleep. I was up by midnight and until 4 in the morning in bed, 4 straight hours. Killed my phone just reading about spreads and stuff because I love these markets. Always trying to get better at it, and didn't do anything. Didn't watch any of this. Was working on a whole other thing, which is why I had to talk to my mentor again today to get reschooled on not wasting my time on other projects. And this came down slowly as it would at night during Asian and London session, and it did most of its move for the day. So when we came in the morning open here, and I was just waiting here posted up, I was very skeptical because we already had made a 4 point, almost 5 point move. If you look at this calendar here, it did 7 points total for the day, and the average range on this is like 7 to 10 points. So I knew looking at 4.5 points, standing here at the bottom of this new area that was going to attempt to become resistance, that I had a tough game to battle here, but there was a chance that I can still pull 3 points to the downside of the 176. So that was kind of my plan, was to try to get down here. By the time these candles were forming, these indecision candles worried me, and I just felt like I probably wasn't going to get a good trade today, and if I did, I'd lose something here. Anyway, I took the trade when this candle formed, and because it had so much strength. I'm used to these things with our bread and butter strategy. It following the 8 moving average, really just kind of just with a lot of strength came down, and it gave me almost 2 points out of my three. Came back against me, and at one point I was up, but I was almost stopped out. I was doing a very tight win to risk reward. Um, and it was 6 ticks against me. My stop was going to be $100 for each contract. I was only in here the single, so I was almost there, and then it pulled back almost again 2 points, and then I started just noticing that our dynamic support resistance lines, they're not the best. They're not going to always draw um, everything dynamically. And still, if you look here to your left, there still was a lot of volume. And I started realizing 176 was going to be a tough game. It was going to be a tough game for a Friday. So I just repositioned um, my stop to take profit at least a point, so I don't at least lose and at least take something off the table, pay for my commissions, make a few, I don't know, dinner, beer money, whatever, and literally just let it go. And of course the rest of the day got snappy and sideways, and it closed exactly where my exit was. So I would have closed with $50. So that's how this went down. You only know when you keep doing it, and you only start learning the activity, the personality of that market. Okay. Next thing, this is the same contract, but for a March calendar, and I'm kind of just holding it here in the sidelines as volume starts switching over. Eventually, I will start using those contracts. Looking at a single 101 crack spread, heating oil versus crude oil. These things range really well too. They move good. They have good volume. And again, these are some of the more tough ones. They're expensive. You're looking at margins over 4 grand to trade one contract, but it's still cheaper than trading crude oil by itself, and it's still less violent. They can trend well if you're on the right side of the trend. So this would be one that'd be played really well in our trend bread and butter strategy. Now, if not, you can always play levels. Okay, so levels are something that can happen here a lot. Things that bottom out. You have a lot of divergences down in here. that you can pick off the 15-minute candles and other divergence here to the long side. And these moves, you don't need a lot of meat off these bones, okay? These moves are very, very big moves financially for you, okay? Um, you'll do really well with these. If you pick these little bottom top and these little levels here, you can do very well, okay? So it's one that I'm going to focus on one day eventually, almost full time. For now, I'm doing good with the grains. When we come to some of our like energy calendars, like RBOB and or crude oil, they can get real. This is the ones I'm working on, mean reversion projects for everybody. I can't figure it out yet, the best method. Again, I personally don't like them. Okay, so I am currently simming some of these, doing some personal tests. In a net gas, somehow, some way, this November, excuse me, November, March, this is November, April contract, um, does pretty good daily moves. So, and also when it, has really good respect to these levels, a lot of support resistance, and also could be a serious trender too. So, um, play it wisely on this one. I'm just gonna leave this one there. I don't really, at this point, trade it myself. This is the crude oil calendar. We're gonna leave that alone. That gets really deep. And here we just have a spread that I do not trade, but I keep on my watch list. It's indices related. It's actual Nasdaq versus ES. Helps us kind of see who has the strength. As we saw, remember last week, tech sector was really crashing, and we had you can see that clearly right here that ES temporarily took the lead, even though all the markets crash. This is a hedge spread trade opportunity to hedge to play the indice markets with some directional bias, but one market versus the other, the tech sector, Nasdaq versus the S&P 500. So, and you can do that with the future contracts as a spread. We're looking at a weighted chart here, and basically, clean long today, if anyone was going to take that break, and could have made over probably $1,000+ just on that move from this morning to the close, and it closed right at these levels here, this 58,425 on a solid number too. Well, just at a quarter or so. I mean, just a solid number. I mean, you just can't make that stuff up. But you could have probably caught some of this here. Obviously, you knew the market was going to be green, so overall, this was going to be a cleanup trend. So I didn't trade it. I've never done it. I watch them. Something that I may add, I just be honest with you guys, I need to focus more because there's a lot of markets, me being involved with Forte Trader, keeping track of for the betterment of the subscribers. Because end of the day, people are going to come in here and find what fits best for them. Me currently, I love the grain markets in inter-commodity relations. So this has been a really good one for me. It makes a really nice move. This one, wheat versus corn, and it makes good moves during the week, on a daily basis. So again, you can play levels. You can just completely take your levels off. Just try to do trend writing. You can play super trend, give you a little bit more kind of a confirmation of an overall trend to that time frame. Maybe just help give you some different confirmation. I like, some technical tools. I'll be honest, guys, some people bash that stuff, but it's all whatever works for you. I have some charts that look like circus. When it starts getting into these Renko stuff for precision entries and stuff, I look at them. I like using exotic bars. I mean, if you look at how support resistance lines really respect Renko charts, and these are ATR adjusted inside TradingView, so to adjust them based on the volatility of that market, um, which isn't always the best thing for strategizing technical stuff, but for support level and resistance levels, I'm sorry, you can see them pretty darn clear, and you can really trade levels like that, take advantage of stuff that other people aren't looking at. So people get biased and egotistical about the way that they trade, and they tend to other people, but really be honest, guys, I've always learned one thing from my mentor, not to judge others if they're making money. Now, you're not making money with something, then you may have to change. But like me, I probably changed stuff in my trading career about 400 times. It has to end eventually. You got to find something that works for you and is consistent. And so that's what I have. It works for me, and it works for. I've noticed literally a small percentage of our members because that's just how the numbers work. I wish it could work for everybody. But, you know, that's just how it is. Okay, so 25 minutes market review, all kind of spread opportunities you guys can take clearly in front of your face using technical idea, technical approach, no fundamental required, trading high performance, professional, complex future products, and you can, again, swing trade these things if you want. You want to swing trade high level time frames, go to hourlies. Can totally do that. You want to use divergences, you can do that. You want to use support resistance levels, you can clearly see here, and trend finding materials. Um, you can see that higher time frame support levels areas, 4 hour time frame. It's just really, really sick, really good um, high probability areas that just seem to work time and time again. Again, you're wrong, switch your position, move the other way. But you have trend to help you if it's when things are powerful and moving in a trend, and when things are sideways, you again can clearly see. Sometimes it takes a while to realize it, but then you'll start seeing when things start toning down. Just with simple moving averages crossing each other like this, um, then the week is over here for everybody. All right. So everybody have a good weekend. It is again September 25th, Friday, 2020. This is the market review, kind of our future spread commodities here at Forte Trader. Everybody take care. Thanks for watching.